What is good, guys? It's Rey-Jay back with another video. And this one I want to break down what's going on with the overall market and why tomorrow is going to be a very important day as we have some big jobs numbers coming out. They're going to be affecting how the market ends up moving. So I'm going to break down why it's going to be very important, what time the jobs numbers are going to be coming out, and what the technicals are suggesting for Tesla, SPY, Nvidia, and the QQQ. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I'm personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks. Now, this offer ends in just 10 days, so check it out before they run out. Anyways, let's break down what's going on with the market. So tomorrow is going to be a very important day because we have some big jobs numbers coming out for tomorrow. It's going to be coming out tomorrow, which is Friday in the morning, and it's going to dictate how the market ends up moving, in my opinion. And the market did slow down a little bit as we had consumer staples leading the way down, at least to some extent. But it wasn't anything that's like crazy. It wasn't that insane. The market was kind of flat for the most part and basically just range bound for most tickers. Now, when it comes to data affecting the markets as a result of how the market's performing, the SPY, Nvidia, and all these different stocks are at very interesting levels. We are still seeing fear dictating the market nonetheless, as the market is still very close to extreme fear mode, and we're still seeing many tickers and indices at relatively low levels compared to like August, compared to like July. This is nothing out of the ordinary, it's just something worth noting. Now, market momentum is still being driven by fear. Fear is still, dictating the market overall, and the market is still just barely starting to shift a little bit. But like I said before, it still hasn't changed for the most part. It's just starting to shift a little bit, becoming a little bit less fearful, but it's still very similar to before. Now, to add on to this, when is the data coming out for tomorrow? 1 hour before the market opens is when the data is coming out. It's going to be at 8:30 a.m. Eastern time or New York time. We have the non-farm payrolls, we have the unemployment rate all coming out. For non-farm payrolls, you want this to be between the forecast and the consensus of 160,000, somewhere around there. If it's way too hot, that would actually be okay for the markets. If it's too low, market would not be as happy. We want to see non-farm payrolls going up just a little bit. Now, when it comes to unemployment, we want this to be either as expected or a little bit hot. We want this to be at around 3.8% or higher. That's what the previous report was. We do not want to see this go down because that could be a little bearish for the markets. So make sure you're ready for this. The market wants some pain technically because if these numbers are too low, if unemployment is dropping in America, the Fed could be incentivized to be hawkish again, and that is not at all what the market wants. So watch this very carefully an hour before the market opens. We also have the labor force participation rate, which is once again not as important, but it's worth noting. We have government payrolls and just a couple of other things. Then we have Waller from the Fed giving a speech around noon. That's for Eastern time tomorrow. And that's pretty much it for tomorrow. There's not way too much data coming out. So this will cause some volatility here and there. But for the most part, the unemployment numbers are going to be the biggest factor affecting how the market moves. So when I refer to good data, I'm referring to data that the market likes, such as like an as expected or higher than expected unemployment rate. And if I refer to like bad data, I'm talking about like the unemployment rate being a little bit lower than expected. So if we get good data, that's going to dictate how the market moves. We're going to likely see the upside scenarios play out. Bad data is going to lead to downside in the markets potentially. So what do I mean by this? So when we look at SPY, basically, when we zoom out of the chart, you will see this green line right here, which is going to be acting as our resistance. Today, we tried to break it. We tried really hard. We wanted to break it, and we came just short. So we tried to break it, came right back down, tried to bounce once again, and then we ended up closing just short of breaking above this resistance trend line, which is telling us that right now, buyers are trying to step in. The buyers are trying to pump the markets, but they're not really getting enough volume. There's not enough steam. There's not enough power from the buying side to bring this market up truly. And the sellers are still, once again, dictating us to some extent. We saw the market drop in the morning. So it's a very mixed market. We are starting to show signs that the market was trying to base at 420, but we're going to be watching this all very, very carefully. So the bullish case is going to be if SPY breaks 425 and we hold above that, 426 is going to be a real possibility. 426.5 in particular. And then if we break that, 428 is a possibility if we turn very bullish tomorrow. If we're bearish tomorrow, you're going to be watching SPY come all the way down to 422. And if that fails, 420 is going to be on the table again. How are we looking right now? We're basically very indecisive, going back and forth and back and forth. So one of these moves is going to be happening. This is going to be determined by the unemployment numbers. So that's going to really affect which way we go. As of right now, we're just stuck in the middle. So we'll just have to wait and see for the time being. As far as Tesla goes, I do have one concern about Tesla. Now, Tesla's been holding up quite nicely, but you could argue that there was a bearish divergence that developed on Tesla after this pump, and we still have this head and shoulders. So this makes me a little bit concerned. Could this head and shoulders play out? It all depends on different factors. If we're bearish, you want to see Tesla break below all the way down below 255. That's going to start sinking this thing much lower towards these lower levels and these imbalances down here, such as 247 and even lower levels than that. If we're bullish tomorrow, you want to see Tesla break all the way up above 262.5 and hold above it this time around. If we hold it, we could be pushing for 268 to 270. So what is more likely? Honestly, guys, Tesla is very tight. So there's a bearish divergence, so there's a risk of downside. It's a little bit more probable. There is a risk that Tesla could break below 260 and start pushing into the mid 250s. And we also have this head and shoulders. But just to be safe, okay, just to be safe, the best thing to do is just be very patient, wait for the market to open and see which way Tesla moves, see which way the market is heading. Because once again, this data is going to be everything. It's going to dictate which way the market moves. It's going to dictate how the market performs. So that's why you have to be open-minded and you want to be very patient in a market like this. With that said, for the QQQ, if we're bullish tomorrow, okay, if we get some good numbers going into tomorrow, we're going to be watching the QQQ try to hit this resistance right here at 360.5. If that breaks, watch this 361.69 to 362 resistance. If it does technically break out, we have a possible cup and handle or even like a double bottom if you want to interpret it that way on the QQQ, which could lead to a breakout towards 365. That's the bullish case if we break 362. The bearish case is going to be us retesting 356. If that fails, then we're going to be sinking towards 353.5 all over again for another test of this trend line. What is looking more likely? Well, the answer, guys, is we're very indecisive. We're very, very indecisive and going back and forth and back and forth and back and forth for 3 days. So the market, especially today, is just waiting for the unemployment numbers. We're waiting for the jobs reports, and that's going to dictate which way we end up going. So the best thing to do is just be patient and wait and see what it causes. Because honestly, guys, I would love to tell you guys what I predict is going to happen, but I can't really predict what's going to happen with this data. I don't know for sure. These numbers could be manipulated. These numbers could be like even faked out if you want to go there. I don't know what's going to happen. That's why it's best to just wait for the data and be patient and see which way it dictates this market. Now, Nvidia is a different story. For Nvidia, if we're bullish, you're going to be watching this thing push up for this resistance right here at 451. We're going to be watching that very, very carefully. So 451 is going to be a key level. Now we have some very strong resistance right there. We rejected off this very hard in the past. If 451 fails us, this thing's going to start sinking towards this trend line right here back down to 440. So watch that test very carefully. Now, if we're bearish, we could just straight up start sinking from the get-go and start coming down to this trend line. So it's best to watch these levels as carefully as possible. It does look like, though, from a technical standpoint, that this thing could retest 451 and reject and start coming back to this trend line at this 440 area. That looks like the most probable move, but just to be safe, you want to be open-minded. Now, Apple's looking a bit more bullish. And this could help the market pop a little bit because from a technical standpoint, we have a nice double bottom. It actually held above 174, which is a good sign. And we have this unfilled gap to fill at this 176 area. So if Apple does get this pop, this could help the market start pushing. This could help SPY and all these tickers start pushing higher, which means we could try to, pump a little bit more. And then we could get rejected because we have this very tough resistance around this 177 zone, very close to that. So what is possible is us essentially just like making an attempt to push like this. This is a real possibility and the most probable move. We kind of like push to fill this gap, and then we just get a big rejection of 176.5 to 177, and we start sinking back down. That is one possibility, so be very careful. This could cause the market to like pop then drop, but we want to just be watching the data just to be safe. Now, if we're truly bullish, you want to be watching for us to break and hold above 175. Then we could fill this gap towards 176.12. If we're bearish, you want to see this thing break below 173.8 or very close to this like 174 zone. If we break below that, we could see Apple sink towards 172. Now, the most likely possibility would be this move right here where we kind of like pop and then drop. So watch it very carefully. We will see if that ends up being the case with all the data coming out for tomorrow. So what else could we say about the market looking at these different tickers? I just wanted to add that for SPY, The bullish case would be us breaking, 426 to push up to 428. Bearish case would be us breaking below 424 to retest 422. And if that fails us, 420 is on the table. I'm open-minded. We're very, very tight right now. We've been going back and forth and back and forth. There's a possible cup and handle on the 4-hour chart, so this could lead to a bullish outcome, but wait for the data to just tell us the direction. Same thing with Tesla. It could go either way, but there's a possible head and shoulders on the 4-hour time frame. But at the same time, Tesla also has a bearish divergence that developed on the chart today, which tells me that there could be a risk of downside. So be very careful now. Even though Tesla did pump and hold up nicely, the bearish divergence suggests that there could be some downside possibly. So be very careful with this chart, and we will see what happens from here. Also, on the daily charts, you can see we have this doji that formed, which suggests that there could be a reversal. So you want to be very careful just to be safe. Tesla was trying to break out, it was trying to bounce, but now these signals are starting to switch a little bit. So I'm just saying you want to be very careful and see which way Tesla goes. The bulls want to see us hold 262.5. The bears want to see us get below 260 and 257.5. The odds do favor the bears a bit more, but just to be safe, you want to be watching the data and etc. Now for other tickers, we have like Microsoft out here looking not the strongest, very, very flat. Now, it did make the move to 319. We called this out yesterday. So if we're really bullish, you want to be watching this thing from a bullish wedge and start pushing for 322. If we're bearish, watch it break below 317.5. It does look like it's going to try to hit 322, then maybe reject off that. So be very careful. We want to be open-minded, of course. AMD made an attempt to balance. We were trying to balance and we ended up rejecting. Now we're just very flat, very tight, but there is still a possible inverse head and shoulders. So if you're bullish, you want to see it break 104.37. If that breaks 109 is on the table. If you're bearish, you want to see it break below 100, which could lead to it selling off towards 97. It looks in the middle, so let's see what the data causes. We will see which level ends up breaking. Now on the VIX, we're down 0.48%, but the VIX still has this bearish divergence, and it does look like it could reach a 17.9 first before trying to bounce, which tells me the market may pop a little bit before coming down possibly, but no guarantees just yet until we see our data. For Google, if you're going to be looking at Google, there's a possible bearish divergence that developed right now, which suggests that there could be downside coming in a retest of 134.8 and potentially 134. So it looks a little bit more bearish to me. There could be some downside on Google. For Coinbase, we look kind of flat right now. This thing is trying to accumulate. If this thing can break 75, then there's a possibility of it pushing towards like 76.5 or so. There's a possible cup and handle, but no guarantees just yet, because you could also interpret this as like a very slanted looking bear flag. So if you're bearish, you want to see it break below 72.5. If you're bullish, you want to see it hold 75. We will see what the data causes tomorrow. Always be open-minded just to be safe. For the 10-year treasury yield, it's kind of flat right now, starting to drop just a little bit. That can help the market pump a little bit. For Amazon, if you're bullish, you want to see this thing break above 126.5. If it breaks that, then 128 is a possibility. If it breaks below 125, then 123.73 is a possibility. We're very flat on Amazon, going back and forth, stuck between support and resistance. So there is a risk of a little bit more downside, but I'm just open-minded. Meta made an attempt to bounce. We actually got this bounce in the morning, hitting this 307 area, then rejecting. And now we're very much just tight. If we're bullish, you want to see it break and hold 307. If it breaks, 310 is a possibility. If we're bearish, you want to see it come down below 302. If that breaks, then 299 is a possibility. We've been going back and forth and back and forth and back and forth for the last couple of days. So it looks like Meta may pop towards resistance, 307 or so, reject and come back down just based off this trend. It hasn't really moved much. It's just very flat. So we will see if this ends up being the case. Now, you could argue there's a possible inverse head and shoulders forming on Meta, which could lead to one more pump. But in order for that to happen, we want to see this thing hold above 307 and turn bullish. So far, it hasn't really done that or given us any signal. It's just very flat, so I can't really make that call just yet. All right, so there is potential upside for Meta, but we want to be waiting for our data and everything else like that before we make any claims. Also, look out for the news if anything does come out. All right, that's what I can basically tell you guys. I wish I could turn more biased in one direction, but I told you guys the more bullish and bearish cases. I told you what's a little bit more likely for all these different charts, but at the same time, always be open-minded. The data is going to be big for tomorrow, so I will talk to you guys about that for tomorrow. Until then, thank you for listening. Have a great day, and get ready for tomorrow morning. That's when all of this interesting volatility is going to be coming. Thank you, and peace out.